So the price of silver has been on a bit of a rip lately. In fact, it's up more than 30% now from its September lows, and it's also in the green now year to date. And if we zoom out and look at the 5-year chart, silver's up more than 40% on that time frame. But it's been a bit of a bumpy road. You know, silver is a small and volatile market, and there's no guarantee that this upward momentum we're currently experiencing is going to continue. There's a lot of uncertainty in the market these days, and even though stocks have already fallen considerably from their highs at the end of 2021, many of them are still quite richly valued. This is a chart of the S&P 500 Shiller PE, a variant of the traditional price-to-earnings ratio that helps to control for market volatility by dividing the current price of the stock index by its average inflation-adjusted earnings over the last 10 years. And you can see that despite the correction we've witnessed over the past year, we are still well above the mean level of 16.99, and there's still plenty of room for this market to fall further. At the same time, the US is in the midst of a deepening recession with no sign of relief in sight. And despite the fact that the Fed has slowed its pace of rate hikes at the recent December FOMC meeting, there was also quite a bit of hawkish commentary from Fed Chair Powell regarding the duration of elevated rates and the impact they might have on the economy, and the markets did not like that at all. Now, is a major market sell-off right around the corner? I suppose there's always a risk of that, although the risk does seem somewhat elevated at the moment, but timing markets is always tricky and it's not guaranteed. But for us stackers, the question isn't so much will we see a major market crash, it's what happens to precious metals if we do get one. Where will the price of silver go if stocks sell off and plummet? Well, we're going to dive into that question in today's video, and I'll give you my forecast because it's not just as simple as the price going up or the price going down. So, let's get into it. Hey everybody, Smart Silver Stacker here. Thanks for tuning into today's video. I hope you enjoy it. If you do, please smash that like button down below and make sure you check out today's video sponsor, SD Bullion, my preferred gold and silver bullion dealer, with the link down in the description. So why worry about the markets tanking anyway? Well, there's not a lot of great economic news lately. The US debt is at a record high. They're going to be raising the debt ceiling soon. Interest rates are up too. You know, we just got a 50 basis point rate hike from the Fed. And in addition to that, some rather hawkish commentary from Fed Chair Powell, who stated, "We are taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices over the long run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done." Now, don't be fooled. The Fed might be talking a good game on the inflation fight, and the inflation numbers were a bit cooler than expected back in November, but much of that coolness was a result of lower energy prices and the release of oil from the Strategic Petroleum Reserve. Now, that's not sustainable, and my belief is that inflation is going to end up much higher before we get anywhere close to the Fed's 2% inflation target. But one thing Powell did get right there is that we're going to see some serious weakness in the economy as a result of these relatively tighter monetary conditions. And along with that comes the risk of a major decline in asset prices. Add to that hawkish rhetoric from the Fed the decline in real wages, the record high credit card debt, the US savings rate at a 17-year low, and the still bubblish valuations of US equities, and it does paint a pretty grim picture. But if we do witness a stock market crash, what's it mean for silver? Well, there's a strong likelihood that the spot price of silver will crash along with other assets. Why? Because investors will be selling everything, including paper positions in the precious metals, in an attempt to raise cash and cover margin calls. And this will drive the spot price of silver down, because the spot price, for those of you who aren't aware, is not the actual price of an ounce of metal. It's the price of a futures contract, a paper derivative of physical metal. Now, under normal circumstances, the paper markets and the physical markets for silver, they're pretty strongly correlated. Even though physical silver bullion products do carry a premium, On any given trading day, if the paper price falls, that means that the price of physical metal falls along with it. But you've got to keep in mind, when thinking in the context of an extraordinary event like a market crash, there's a lot more paper contracts for silver out there than there is actual metal backing them up. And that's why, in extreme circumstances, the correlation between the paper and the physical market can really start to break down. Just take a look at some of these numbers from the COMEX, for example. Total vaulted silver, almost 298 million ounces. And how much paper is that physical backing up? Well, the open interest right now is 123,733 contracts, and at 5,000 ounces a pop, that equals more than 618 million ounces of paper silver. But the situation is actually a bit more extreme even than that. In a document titled Appendix C, Analysis of Deliverable Supply Silver Futures, the CME Group tells us, the exchange, in an effort to represent a conservative deliverable supply that may be readily available for delivery, made a determination to discount from its estimate of deliverable supply 50% of its reported eligible silver at this time. So if we take that 50% reduction into account and remove half of all of the eligible silver at the COMEX, we really have about 165 million ounces of physical silver backing up that 618 million ounce open interest. And this situation is not just limited to the COMEX. In fact, if you take the total number of paper ounces traded on world commodity exchanges and you compare it to global annual silver production, you get a ratio of 457 paper ounces for every single ounce of physical metal that is mined out of the ground in an entire year. So what's the effect of all of this leverage in these paper derivative silver markets? Well, if stocks crash, investors will sell a lot of paper silver, but very few holding actual physical silver bullion are going to be selling. In fact, investors will likely be buying physical silver as a hedge against the risk of a complete market implosion. And that means that premiums on physical silver products are going to explode. And it won't be greedy dealers just charging an arm and a leg over the real spot price, as many people seem to think. It will be the fact that the paper spot price is just that, paper. It's fine for speculating or hedging a physical position under normal market conditions, but it doesn't offer the security and the lack of counterparty risk that real, tangible silver bullion does. So even if we do see the spot price collapse, real silver that you can hold in your hand will remain quite desirable. And the reaction of the Fed to this hypothetical stock market crash? Well, likely more easing, more money creation, bailouts, and rescues. And if markets do crash, this is exactly what politicians and the public are going to be begging for. And that all means that in the long run, the price of precious metals, and silver especially, will likely be headed much higher. That's why even if the spot price of silver does head lower, and that seems to be a possibility in light of the weakness in the US economy and how overvalued stocks continue to be, I'm happy to be early to the stacking party. Because a collapse in markets, it may not be the buying opportunity in physical metals that some are anticipating. Of course, none of this is financial advice. Always do your own due diligence, folks, but let me know what you think. What's the possibility of a stock market crash in the near future? What are some potential catalysts for such a move? And if we do get one, what will it look like for silver? Leave me a comment down below to let me know what you think. Thanks for watching, everybody. Stay safe and happy stacking. I'll catch you next time. Smart Silver Stacker, out.